I've made over $50,000 in the past month trading, and I've only had one red day. And if I were to choose one concept that has helped me achieve these results, it would be liquidity. Understanding where liquidity rests in the markets will allow you to know exactly where price is going to head towards next. And in today's video, I'm going to share with you the only liquidity rule that you'll ever need to become profitable. So without further ado, let's get straight into the video. So in today's video, we're going to talk about liquidity. Liquidity is one of the most important concepts that you have to understand. And if you can understand where liquidity rests in the markets, it doesn't matter what entry model you have, as long as you know where price is most likely going to head towards next. So we're going to talk about liquidity, how to identify liquidity, liquidity runs versus liquidity sweeps. And then of course, we're going to be going over some examples to really solidify this concept. So what is liquidity? Liquidity refers to the ease at which an asset can be bought or sold. So in the most simplest terms, it's understanding where the money is in the markets. So you can see right here for liquidity, right? Liquidity is going to be always resting above old highs and old lows in the markets. The reason being is because buyers and sellers are going to be looking to place trades above every old high and below every old low. And there's really three types of liquidities that can be deployed in the markets. Number one is entries, number two is stops, and number three is take profits. So as you can see right here, what we have at this old swing high is what's called liquidity. Let's say you are long from down here, we're looking for a pushback towards the upside, we're looking to target above this swing high, and we're going to have what's called our take profit. So our take profit is going to be right here, and we're going to look to deploy liquidity in the markets. Let's say, for example, we were short off this swing high and price is gravitating towards the downside. Let's say we don't have continuation. Where's our stop going to be? Our stop is going to be above this swing high, and you can see once price gets above this level, we'll end up being stopped out. So that's another form of liquidity in the markets. Another potential scenario is if, let's say, we're breakout traders, let's say price is gravitating towards upside, and let's say you want to enter right here looking for a push towards upside, this can be also an entry point. So every single swing high and swing low, there is liquidity resting above and below those levels. So that's why understanding liquidity is so important when it comes to trading and understanding where price is most likely going to head towards next. So where is liquidity resting in the markets? And liquidity can come in form of two ways: internal liquidity and external liquidity. What we're going to be talking about is external liquidity, and it's liquidity that is not inside its current dealing range. So I consider anything external that is above or below your previous day's highs and lows. If we're above those levels or below your previous day lows, then we're looking for external liquidity. If we're inside the range, then we're looking for internal liquidity, which is internal. Next, what we have is old highs and old lows. Look left for old highs and old lows for targets. Liquidity rests above and below those levels. If we're not looking for your previous day highs and your previous day lows, then we're going to be looking for old highs and old lows. This can be previous week's highs, this can be previous week's lows. And then finally, what we have here as well is higher time frame key levels. This can be seen on multiple time frames: the weekly, the daily, the 1 hour. This is basically the exact same thing as old highs and old lows. So all we have to understand is that liquidity is resting above and below old highs and old lows in the market. So if we can understand this, then we can be using this information to look to target potential old highs and old lows. With this being said, what we want to talk about now is if there is liquidity that's resting above an old high or old low, and what is the difference between a liquidity sweep versus a run on liquidity. And what we have here on the left hand side is what's called a liquidity sweep. So you can see we're creating a swing high in the market, price pushes towards the downside, then we come back up in towards the swing high. What do we want to see? We want to see the reaction off the swing high. Price pushes up in towards this level, we have an upper wick, but the body candle closes underneath this key level. In this case, if the body closes underneath and you have an upper wick, this is what's called a liquidity sweep. And a liquidity sweep means price comes up, takes out the liquidity, closes back underneath, signaling that sellers are stepping in, indicating that potentially there could be a reversal if we have confirmation towards the downside. So this is what's called a liquidity sweep versus the right hand side where we have a run on liquidity. And a run on liquidity is when we actually take out the liquidity and we continue in the overall direction. So you can see similar thing on the right hand side. We have a swing high, price pushes towards the downside. Now we push up in towards your swing high, but in this case we have a strong candle close above this level. And now what this indicates is price most likely is going to continue higher. And this is what's called a run on liquidity. So depending on the context of the markets, what we're going to be looking for is these two scenarios: is a potential liquidity sweep where we look for a reversal, or if there's a run on liquidity, we can be looking for continuation. With this being said, now let's go on to exactly what liquidity looks like in the markets. So this is exactly what liquidity looks like in the markets, and it can come in four different ways. First one being equal highs and equal lows. Whenever we have built up liquidity, what can we expect? We can expect continuation towards the upside because there is liquidity being built above these equal highs. Next one is what's called fake out liquidity. Fake out liquidity is when we have this swing high, price pushes above the swing high, and we fail to close above the swing high, sweeping out the liquidity, and most of the times, right, reversing back towards the downside. Next, what we have is trendline liquidity, and trendline liquidity is building up liquidity to either side where we have these higher lows being built. We have not taken out these higher low pivot points, so if price does want to reverse and take out this swing low, there's a good chance we take out more swing lows just because of the built up liquidity that is towards the downside. And finally, what we have is what's called range liquidity, and range liquidity is when we make a high and low in the markets. What we have is built up liquidity above these old highs and old lows. So what we can be looking for in this case is most likely a sweep of liquidity and a return back inside the range because the market is consolidating. Now let's take a look at each one of these more in depth. So as you can see right here, what we have is equal highs and lows in the markets. On the right hand side, what we have is equal highs, and whenever we have equal highs being put in, what we like to see is a reaction off of your equal highs. Whenever price has these, we usually end up gravitating towards the upside, and depending on the reaction that we have off of these equal highs, we can have a run on liquidity where we have continuation towards upside once we get above these equal highs, or potentially what we can have is a sweep of liquidity where price ends up gravitating towards upside, taking out the liquidity above these levels, and we end up having this reversal back towards the downside. But all we have to understand is that there's liquidity resting above these equal highs, and that's where we can be looking to deploy liquidity either through entries, stops, or potential take profits. Now on the right hand side, what I have is equal lows. So similar thing to the upside is we have equal lows, and whenever we have equal lows in the markets, what we have underneath these lows is what's called built up liquidity. So majority of the times price is going to look to gravitate down in towards these equal lows, and depending on the reaction, if we have a strong candle closure, we can have continuation towards the downside, which is a run on liquidity, or if price comes towards the downside, sweeps out these equal lows, we could have this reversal back up in towards the middle of the range. So as you can see right here, equal highs and equal lows is one of the easiest ways to spot liquidity, and whenever you see this on the charts, you want to make sure that you're paying attention to these key levels because a lot of times price is going to come back towards these key liquidity levels. So as you can see, I have a chart here. We're clearly in an uptrend in the overall markets. We end up creating what's called our swing high. So you can see our swing high is formed, and then price consolidates, comes back closer to your swing high. We can mark out this general area of price, and you can see multiple touches here creating what's called our equal highs. Price pushes up, creates our basically flat top or equal highs, and then you can see as price comes back towards the downside, we end up taking out this key level, but eventually we gravitate back towards the upside. The reason being is because there's liquidity resting above these old highs in the markets, and a lot of times whenever you have the built up liquidity towards the upside, price usually ends up gravitating back towards these key levels. So you can see price comes back towards these key levels. So far is using this level as a run on liquidity. We're having a strong candle closure above this key level. Price is now retesting, and now what we can expect is potential continuation in the market. So based off this thesis that we have, we can be looking for a couple different trading opportunities. Number one, we can look to potentially trade up in towards these equal highs, or we can wait for the run on liquidity and then look for the retest of your equal highs for this continued push back towards the upside. So this is the exact same thing for the downside as well. Whenever you see equal highs and lows in the markets, this is going to be a very key level to look out for. And next, what we have is what's called Fakeout liquidity. And Fakeout liquidity is when we form the swing high, we push price above the swing high, and we're unable to close above this level. Sellers step in and end up pushing price back towards the downside, back underneath this swing high, signaling that price is most likely going to be reversing back towards the low. So this is a great example of what's called Fakeout liquidity. Fakeout liquidity often happens on the lower time frames when you have a higher time frame trend. And as you can see, this is a great example of Fakeout liquidity. We have this push towards the upside. We create what's called the swing high. we end up having this nice push up in towards this liquidity level. Price closes above this liquidity level, but you can see the next candle immediately seller step in, big rejection, and we have this nice push back towards the downside, pushing price back underneath this swing low, and then we end up having this continued push back towards the downside. And this is a good illustration of what fakeout liquidity looks like. Of course, we're going to be going into more examples here in a second. Now let's go on to the next form of liquidity. And next what we have is what's called trendline liquidity. And you can see price is now having an uptrend. We're continuing to push towards the upside here. And what we have is this pullback. And now we have built up liquidity back towards the upside. You can see now what we create is what's called our trend line. And above every single old high, what we now have is liquidity resting above these highs. So if we're in a clear trend towards the upside, we're holding key levels. What we can expect to happen is price end up pushing back towards the upside, back up in towards these key liquidity levels for this continuation of this trend. So this happens a lot when you have micro trends and a macro higher time frame trend, and that's exactly when you want to be deploying trendline liquidity. As you can see right here, what we have in this case is built up liquidity in the overall markets. You can see we have multiple touches here, and once finally price breaks with a lot of displacement, what we have is continuation back down in towards this key low. We take out liquidity on this low, and then all the way back towards the downside. So you can see once we take out this swing low, we have what's called a lot of built up liquidity towards the downside. And once we break structure as well, you can see price ends up pushing back down towards the low, taking out this original key pivot point, which where price started this trend. And this will happen a lot of times when price is in a clear trend. And finally, what we have is what's called range liquidity. And range liquidity is one of my personal favorites, is because whenever price is consolidating, after consolidation, what we have is continuation. So what we have is your range high created, and we have your range low created as well. And what's above your range high is liquidity resting above these key levels, and what's below your range low is liquidity resting below your key levels. So if we understand that liquidity is resting above and below these old highs and lows, what we can be looking for is one of two things, right? If we're bullish, we can be looking for this continued push, right? Retest and a push towards the upside, right? This is what's called the run on liquidity. Or if price is at the low of the range, what we could be looking for is this liquidity sweep and for this reversal back towards the upside. And if we're bearish, what we can be looking for is this liquidity sweep off of your range high for this continued push back towards the downside. Or if price is at the low of the range, we end up having this liquidity run underneath these key lows. We can be looking for the continuation underneath these lows for this push towards the downside. So based off of where liquidity rests in the markets, we can be looking for a liquidity sweep for a potential reversal, or we can be looking for a liquidity run, which is a continuation of the trend. And as you can see right here, what we have is our example on range liquidity. And what we're going to mark out here is the high of the range, and we can also mark out the low of the range as well. So this is our range high. As you can see, we have a lot of built up liquidity above these old highs. And then towards the downside, we have a lot of liquidity built up below these old lows. So what we're going to be looking for is the reaction that we have off of your swing high and your swing low. What we can be looking for is the sweep of liquidity and a potential reversal back towards the downside. Or what we can be looking for is the run on liquidity and be looking for this continued push towards the upside. You can see in this case, price ends up having a strong push towards the upside, coming back down in towards our key level of previous resistance, now turning into support. You can see that the buyers are stepping right off our retest level, signaling that we're most likely going to push back towards upside. And you can now see price ends up having this continued push back up in towards highs and above. So now with this being said, let's talk about why context matters and how we can avoid fakeouts and capture continuations. So as you can see right here, what I'm going to have is a line illustration drawn out. And as you can see right here, what we have created in the overall markets is equal highs. If we have equal highs created in the overall markets, what can we expect based off of this chart example right here? Most likely what we're going to have is continued push towards the upside. Because there's liquidity resting above these levels, we're creating higher lows in the markets. There's a very good chance price ends up having a run on liquidity, and we end up having this continued push towards the upside just based off of the overall higher time frames. Versus, let's say we're in a downtrend in price. And you can see right here, what we have created is also equal highs. As you can see, price has these equal highs created, but in this case, we're in a clear downtrend. You can see we're making lower highs, lower lows, lower highs. There's a very good chance that price, instead of breaking above, running this liquidity level and continuing higher, there's a much greater chance that price is going to end up coming up, sweeping out this level, because it's now coming right back into a key level of support, now going to turn into resistance. There's a greater chance that price is going to use this as a sweep, and we end up having this continued push back towards the downside. And as you can see right here, context matters. The examples I just showed you are both equal highs, but one was more likely to have what's called a liquidity run, and the other was going to have what's most likely called a liquidity sweep. And the way to determine the difference between both is based off the context that I showed you and based off the higher timeframes as well. We can have another example played out. So let's draw an uptrend once again. Let's say we have consolidation now. We form our range high and range low. So in this case, what we have is range liquidity. There's liquidity resting above these old highs, and there's liquidity resting below these old lows. What are we more likely to be looking for in this case? We're more likely to be looking for a bullish scenario. So there's two bullish scenarios that I mentioned earlier, which is number one, a reversal, which is a sweep of these lows. We have this potential continue push back towards the upside, or if price can get above this swing high, we can now be looking for the run on liquidity for this continue push towards the upside. So we're much rather look for the bullish scenario in this case based off of the context of the higher time frames, whereas we would not be looking for the bearish scenario because it wouldn't make too much sense to short underneath this range low looking for continuation towards the downside because we're about to short right into a key level of support. Or if price ends up gravitating towards upside, it wouldn't make too much sense to look for this potential reversal off this range high because of the higher time frames, and there's a better chance that we end up having this continued push back towards the upside and having a run on liquidity based off the higher time frames. So you can see in this case, context is what matters, and I always preach context and logic is what matters the most. Also, if you guys want to know exactly what I'm looking at coming into the day, I do this every single morning in my pre-market preps on YouTube. It's completely for free, and I'm going over exactly what I'm looking for coming into every single morning and the reasoning behind why I'm looking for the trades that I do. Not just drawing levels on a chart, but understanding the logic behind the trades and why they work. So with this being said, now let's hop into the charts to see some examples in real time. So as you can see, we're on my first example here on the QQQ, and coming into market open here, what we're going to have marked out is key levels of liquidity. So you can see we have marked out this low that we created. We also can mark out your previous day lows here as well. So now you can see we're underneath your previous day lows here on QQQ. Now we're gravitating down in towards this low that we created all the way back at your 438. So coming into market open, what I would like to see is a reaction that we have off of your 438. If you can get underneath your 438, potentially have a run on liquidity and stay heavy, we can see some more continuation towards the downside. If we end up coming down, sweeping this level, then we can see this potential reversal back up in towards your previous day lows. What's more likely to happen is scenario number one, just because the higher time frames is a little bit more bearish. As you can see, we're in a clear trend towards the downside here on the overall markets. So I am leaning more towards the downside coming into market open. Now we can mark out the key levels and play out the tape. Okay, so you can see I have the first 15 minutes played out here. So far, we're staying heavy underneath your 438. So now let's see if we have any sort of reaction off your 438 for this potential continued push towards the downside, because now we're staying heavy underneath that key level of liquidity. So as you can see here on the Qs, we have multiple rejections off of this 437.80. You can see that the sellers are stepping in off this level as well. This is where we can go look in short with a stop just to break above. And in this case, for our targets, we're going to be looking for that next liquidity level. So if we go back onto the 15-minute time frame and zoom out just a little bit, in this case, where is our next key level of liquidity? Our next key level of liquidity is going to be all the way back at this April 10th lows. We can also mark out this key low as well and use these as potential partial targets. Now we can go back onto lower time frames and use these levels of liquidity as potential targets. So now we can drag this over and we can play out the tape. And you can see right there, QQQ ended up having a super nice push towards the downside, right in towards our key levels of liquidity, being that 435, and then price ended up gravitating all the way down perfectly in towards where our key level being that April 10th lows. And as I mentioned earlier, old highs and old lows have liquidity resting above and below those levels. So now let's go into the next example that I have. So now you can see we're on my next example, and this is SPY on the very next day. So coming into this day, the key levels that we're going to have marked out is going to be your previous day highs. We're also going to mark out your previous day lows. And what we like like to see is the reaction that we have off of your previous day highs and lows. This is where the liquidity is resting coming into market open. So what I like to see is a reaction that we have off of your 520. What we can be looking for is a potential liquidity sweep for this continued push back towards the downside. But if price can get above this 520, hold above your 520, we potentially can have a liquidity run back up in towards your 524 and this 526 as well. So now what we can do is mark out our key levels and play the tape coming into market open. Play the tape. So you can see so far within the first 15 minutes of market open, we're having this nice strong push towards the upside. We're now getting above its previous day highs as well. So what I like to see is now the hold of your previous day highs for this continued push back towards the upside here on the overall markets. Now let's go back onto lower time frames. Now let's play out the tape. You can see right there on SPY, we're coming right back down in towards your key pivot level. We also have this 1 minute order block here as well. Once we have this candle close above its previous candle, this is where we can go look long with a stop just a break below. And what we can be looking to target now is a push back up in towards high of day, along with your next key levels, which we'd have to go back onto the 15-minute time frame. In this case, the next key levels that I have for SPY is all the way back up in towards this 523 and all the way back up and towards your previous close that we had on this day, which is your 525. So this is what we can be looking for. And now we can play out the tape. And as you can see right there, SPY end up having a nice push towards the upside. Of course, you're not going to look to hold your full position for this push higher. You're going to take partials along the ways at high of day, the next key liquidity level, and then your final targets being that full gap fill all the way back up and towards your 525. Now let's go on to the next example that I have for us. So as you can see right here, we're on my final example. This is on Netflix, and the levels I'm going to have marked out coming into today is going to be your range high. We're also going to mark out your range low. So you can see we just had earnings here on Netflix. Now we're creating a range in the market. So what I would like to see here is the reaction that we have off of the top of the range or the bottom of the range. If we want to see a continued push towards upside, I like to see a liquidity run hold above this level for this continued push higher. If we have a pop up in towards your 1020, we show some weak price action, we can be looking for this trade back towards the downside here on Netflix. So now let's mark out key levels and play the tape coming to market open. So as you can see right here, within the first 5 minutes of market open, Netflix is having a really big push above its previous day highs along with this earnings highs as well. So now that it's above your earnings highs along with your previous highs, what I like to see is this be used as support for this continued push towards the upside here on Netflix. The next key levels towards the upside, in this case, we can look left. So we can look back onto the 15-minute time frame and zoom out. What we have on Netflix is this room all the way back up in towards your all-time highs. If I actually go into the daily chart here, you can see this a little bit more clear, but once we get above your previous day high, the next logical level is going to be this all-time highs level here at this 1064. So now let's go back onto the lower time frames. So what we're going to be looking for Netflix is some sort of push back up in towards this all-time highs. The reason being is because there's a lot of liquidity resting above this 1064 level. So that's the main targets that we're going to be looking for Netflix to gravitate towards. As we play the tape here, as you can see, Netflix is starting to push towards the upside. There's not quite the retest of your 1023. So in this case, what I waited for was a down close candle. What I had marked out was this 1044 down close candle here. You can see that price end up having a nice reaction candle. I got in here with a stop just to break below, and now I'm looking for that full all-time highs here on Netflix. Now we can play out the tape. So as you can see, Netflix end up having a really solid push in towards that all-time highs. The reason being is because there's liquidity resting above that all-time highs level. So as I mentioned, if you understand where the liquidity is resting, you can look to target those key liquidity levels. So with this being said, let's hop into some live examples that I had for this day. This actually happened yesterday, and I'm taking Netflix along with SPY towards the upside as well. Let's get into it. And your last week's lows, which is your 520 for the QQQ, you can see we're just right back in towards similar thing. It's previous day highs and it's last week's lows as well, which is now your 439. So coming into today, we're actually gonna have two gaps in the overall markets. If I go into the regular trading session, you can see we're opening up right around this 439. We got these two gaps. We're gonna have this gap over the weekend, and now we're gonna have this gap back towards the downside. So what we really want to see is kind of the first 15 minutes develop to see if we want to push back up, fill the gap that we created over the weekend, or if we're gonna potentially push back towards the downside and fill the gap that we created overnight. So we'll keep an eye out on this 438 level here for the QQQ. That's gonna be key on the Qs. For the SPY, the key level here is going to be this 520. So as you can see here, I'm just reiterating what I was saying in the pre-market prep. What I'm looking for is the reaction reaction that we have off of your previous day highs here for the Qs and the SPY. If you can get above its previous day highs, we can potentially have this liquidity run back up in towards its 443 here. If we end up having liquidity sweep, then we can see this potential reversal back inside the middle of the range. So we're going to wait for the first 10 to 15 minutes to develop, and then based off that price action, we're going to be looking for a liquidity run or the liquidity sweep. If it does show some strength off this 1032, potentially if it breaks above, we can be using this 1032 as risk. I would like it down towards that 1024. That's kind of my low risk, and that's where I prefer Netflix at. But we'll see what kind of shapes up here in the next couple of minutes. Qs, if we can break above highs, then that's going to be a good sign as well. Qs back up in towards this high day, basically your opening candle range high. SPY, let's see if we can break above high day as well. All right, Qs breaking above highs here as well. Strong candle closure along with SPY. Now I'll be looking for SPY 520 for this push up in towards previous day highs and above. And then also keep an eye on Netflix as well. This one has relative strength. So as you can see right here, so far within the first 10 minutes, we're finally breaking above its key levels, which is 520.30 here on SPY. For the Qs, we're breaking above your opening range candle high as well. So now all dips that I like to see get bought up here on the SPY for continuation higher. I like to see the Qs push up towards upside. And as I was talking about, Netflix is one of my main watches. I really want to see the retest of this 1024 for this push back up into towards that all-time highs here on Netflix. Yeah, as for Netflix now above your 1045, this down close candle you like to see hold now. 1047, 947 for this push up and towards all-time highs. So yeah, as you can see right now, Q's pulling back, SPY a little bit of a pullback here as well. Netflix, I was unable to get an entry earlier down at this 945. So what I'll be looking for is this down close candle here at this 1045 for this push up in towards this all-time highs. SPY can break back above its previous day highs, which are 521.60. This one has a clear shot back up towards high day and that gap fell above. Could be on this candle closure, basically this 84% roll. Yeah, if you look at the ES contracts here, SPY can get candle close above its previous day highs. Okay, yeah, SPY end up taking the ES on that candle close. Risk is going to be just a break underneath this 521. I want to see this push up in towards high day and above, potentially that gap fill now. So as you can see right there on SPY, price came back down in towards this 521. A little bit more of an aggressive entry. What I was waiting for was the reclaim back above this 521.73, which was our previous day highs. This was a key level for me, so we're reclaiming this level with strength. Now what I like to see 84% roll, so I got in on that candle close. Now I like to see continue push towards upside here on SPY towards high of day. I like to see Qs push above high of day. As for Netflix, I'm still very much interested in this one. I like to see this push back up in towards that all-time highs, which is at your 1062. I took a couple, only a very small position size on Netflix, a couple contracts just risking off really 16 on the cons. So as you can see right there, I ended up just taking some Netflix calls, just got in off that 1050, risk a break below this 1 minute order block, looking for that push towards this all-time highs. I also took some Apple ones as well, scaled up in towards this 198. For the SPY, you can see nice continuation now, gravitating up towards the 523. Took some more off on that 523. As for Netflix, as long as you maintain above this 1 minute order block, I'm still going to hold my position. Yeah, nice trade. Netflix all-time highs right there. I only have one contract on Netflix. I'm just going to let this ride. We'll see what happens. So as you can see right there for the ES, we end up having a nice hold of your 5264. Push right up in towards our key level. For Qs, pushed up in towards that gap fill. And then Netflix, as you can see, really strong push in towards that all-time highs, which was my final target that I had for this name. So with that being said, I hope you guys enjoyed that video. I'm actually going to link this full live session, no cuts whatsoever. If you guys want to check that out, you guys can. That's going to be the link in the description below. And with that being said, I hope you guys enjoyed the video. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.